This is Chanel Bunger with the Becker Private Equity and Business Podcast, and today I have with me regular guest Matt Wolf. Matt's the Healthcare Senior Analyst and National Healthcare Business Valuation Leader at RSM and joins us regularly to tell us about some of the trends that he's watching in private equity. Matt, thank you so much for joining me today. What are you currently seeing out there right now?
Yeah, thanks, Chanel. One kind of victim, I guess, of the rate hike environment has been the IPO window, which has largely been shut off for the past 6 to 9 months, maybe a little longer, depending on the sector you're in. And, this week we saw some really interesting listings actually in the IPO market. The biggest one, I won't name the company specifically, but was a large thrift retail company that listed, and they actually eventually listed above sort of the initial roadshow valuation range, largely oversubscribed IPO, which I think kind of can read into two different items about this. One is that, like all other markets, the IPO market is also shifting to value from growth. All right. Whether it's private equity, initial public offerings, investors really are switching their mindset to growth companies, growth investments, to value investments compared to growth, right? As interest rates increase, we just can't finance the same ambitious growth dreams that we had in previous cycles. And so that's notable that IPO activity is maybe beginning to return, perhaps at a trickle, and we're seeing a lot of it in the value area, the value type companies. Also notable is, and as Scott and I have talked about before, is consumer spending and what's going on with consumer spending. The U.S., like every other developed economy, is really, almost every other developed economy is really driven by consumer spending. And the U.S. consumers have significantly spent down their COVID savings that most households were able to save as a result of staying inside and not traveling, not dining out, not buying as much during the COVID, and also the kind of the stimulus and transfer payments to those households. We're all sitting on a bunch of cash, depending on the estimate you want to listen to. We still have, as a country, as a households, we still have 700 billion to maybe a trillion, maybe a little bit more in excess cash available to us. However, and Scott and I have talked about this too several times, is that that's not homogenous across all consumer groups. So yes, the U.S. is a consumer-driven economy, but the consumers are very different. If we look at the household savings of top income earning households, well then yes, they are still sitting on a lot of excess cash. If we look at the household savings, the balance sheets of lower income households, they're actually now have fallen below where they were pre-pandemic, which I think is also perhaps part of the reason why a company like a kind of thrift store retailer would be doing so well in the public markets, given not only investors' focus on value over growth, right, delivering margin instead of delivering explosive growth, but it's also well aligned with this sort of K-shaped recovery and different spending power of different households, different demographics. So, I guess in summary, it's really, number one, maybe we're beginning to see a slow trickle of IPO activity back into the markets. The activity that we're seeing is on the value side of companies and not so much investors rewarding aggressive growth, which makes sense given the state of consumers, right, and the outlook for consumer spending. Not only given household balance sheets, but then also as we shortly resume student loan payments. So that's kind of what we're watching this week.
Perfect. Well, thank you so much, as always, for joining me on the Becker Private Equity and Business Podcast, and thank you for keeping us updated on all these trends.
Thank you, Chanel.